Hello, it's the trade doctor Amber Brim here and your assistant me, Brooklyn Brim. And we're going to be talking about what the option trading is. And let's Mom do the rest.
Thank you. Hello, and welcome back to my channel. I'm so glad that you guys are here with me today. Today, I am going to be talking to you a little bit more about what options are. So if you watched my previous video, then you'll know that I quit my job in 2022 to trade options full-time. And that may have had you wondering, so what exactly are options? That's what we're going to talk about today. Grab a notebook and a pen because we're going to get into it, okay? So options are basically contracts, okay? They're contracts that buyers and sellers enter into in regards to the market, okay? So when you enter into this contract, it gives you the right, but not the obligation, to buy or sell a certain security, okay? Whether that is Apple, Amazon, Facebook, which is now known as Meta, Bank of America, whatever the company is, you have the right but not the obligation to buy or sell that security at a fixed price, okay, which is called the strike price. All right, so when you think about the strike price, think about that being the price that you think the security is going to move towards, whether that is moving up or down, all right? That's what the strike price is, by a certain date. So the certain date is your expiration date. That's when your contract expires. Basically what it means is that you have control over 100 shares of a security and you get to decide what you're gonna do with it, whether you're gonna sell it, whether you're gonna keep it, or whether you're gonna sell that contract by a certain date. So now that you know what an option is, you might be wondering, like, what would I use an option for? How do investors use this? Well, some investors use it to help protect their portfolio. So if you currently have a portfolio and you have a lot of shares of stocks or ETFs that you own, you might use options to help protect your portfolio, okay? And what you could do is that if the market seems like it's going down, you can purchase puts so that you can make money to help offset the decline in your portfolio account. All right, so that you're not losing as much money, you're making money as the price of the shares that you own are going down in value. So it kind of helps to kind of offset things. Some people use options as an opportunity to buy stocks and securities at a sale price, because remember, you can choose to purchase these, the security at a certain price, all right, which is the strike price that you chose, by a certain date, by an expiration date. So it might be a way for you to actually buy some securities for a sale price. And then other people like me use options to generate income. And that's what we're gonna be talking a little bit more about today. Selling calls and puts, all right? This is a strategy that some investors use where they will enter into a contract to sell a call or a put. It's a great way for seasoned investors to make money, but this is a strategy that really requires a lot of experience because you need to know what you're doing. It's a way that you can help to protect your portfolio. It's a great strategy for people who are already versed in the market and already know how to trade, okay? But that's not what I teach about. I teach mostly about buying calls and buying puts. And you might be like, well, what the heck? What is the difference? Selling calls, selling puts, buying calls, buying puts, what does that even mean? All right. When you buy a call, you are anticipating that the market or the price of the security that you're buying the call for is going to go up in value over a certain period of time. Okay. So you're banking on the fact that the market is going to go up or that security is going to go up in value. So I like to say, okay, look, call up a friend, right? And that can help you remember. Calls are when you think that the price is going up. Hey girl, I called you up to see what was going on. Or, hey friend, I was just checking on you, decided to call you up and make sure everything was good. So with a call, we think that the market is going up or the price of that security is going to go up in value. Whereas a put, when you enter into a put contract and you're buying a put, you think that the price of that security is going to go down. And so for the ladies, what I say is, look, put that donut down. It's summertime. Look, it's right around the corner. You do not want those extra calories. Put the donut down. So think about puts going down. So you wouldn't think the price of the security is going down. You enter a put. And then calls is when you think the price of the security is going up. All right. So here's the thing. This is the best part, and this is how we make money, right? When you enter into an option contract, you pay a premium price. So yes, you do have to pay to play, but each security has a different price. Like some commonly traded securities can be very expensive, such as Chipotle. Believe it or not, Chipotle contracts are very expensive. Whereas some other contracts for certain securities might not be so expensive, like Apple. You might be able to enter a contract for Apple for $50. All right. Bank of America, you could get into a contract with Bank of America, depending on what your strike price and expiration date is, for like $20 per contract. So point being, you're going to pay to play. So you do have to pay upfront a premium price. But what happens is that you pay this premium price to purchase your contract, to enter into your agreement, right? And as the price of the security moves towards your strike price, that premium increases in value. And so what do? You're like, oh, good. It's increasing in value. This is great. When it hits a certain price based on your technical analysis, you say, hey, I'm gonna turn around and sell this contract to somebody else. And that's how you make money. So you buy the premium. All right, you pay a premium price for your contract, and then you turn around and sell that contract for a higher premium price, and you get the difference in that money. That's how you make money with trading options. I know it sounds a little like, what? Are you sure? That seemed like too easy, and really, it is too easy, y'all. It really is too easy. It's easy. You do have to understand some things, right? And so, of course, we get into all of that. If you register for my class, you'll learn all the details and all the technical analysis and fundamental analysis that will help you know when to enter into a contract for certain securities, how to know where the price is going, if it's going to go up or going to go down, those kind of things. But get this, y'all, and this is the great part about trading options versus just owning stocks, which is nothing wrong with that. That's a great way to grow your money and acquire wealth as well, purchasing stocks outright and holding them for the long term. But listen to this. If you buy a put, you are banking that the price of that security is going to go down in value over a certain period of time. And guess what? You pay a premium price to enter into that contract. But as the price of that security goes down, your premium increases in value. That's right. I know it seems like, really? Huh? How does that work? The price of that security needs to move towards your strike price within the time frame of your expiration date. So before your contract expires. But yes, yeah, the premium increases even when the value of that security decreases, and you turn around and sell it to somebody else and you make a profit. It's that simple. That's what option trading is, okay? Some people try to make it seem so complicated, and you're like, oh my goodness, I can't understand all these terms and this chart and these candles and all the things. That, it comes later. You do need to be able to look at a chart and kind of anticipate, based on some technical analysis, where the price of the security is going. But when I tell y'all my 9-year-old is looking at charts and able to look at things and decide where it's going, that's how easy it is. You can also learn how to do this, okay? Oh, if you want to see this play out in real time, head over to my website, and there is a video on my website titled 1K to 8K in one day, and you'll see exactly what I mean when I say that you can purchase contracts for a premium price and then turn around and sell them for a higher price to make your profit. Forget the like button, all right? And subscribe to my channel. I'll have more videos talking about how to plan out your trade so that you can be a successful option trader too.